Hi folks. One of the keys to growing a manufacturing company or a machine shop isn't just being good at manufacturing stuff, it's understanding some of the business basics. And one of the most important elements of that is managing your cash flow. And one of the biggest elements of managing cash flow is managing accounts receivable. Let's cover three things in today's video. Number one, some basic terms you're going to hear and see. Number two, why is this stuff so important? And number three, what are some tips and strategies you can use to get paid and get paid on time? Feel free to use the timestamps to jump ahead. So first off, some industry terms. Accounts receivable. Accounts receivable is when other people owe you money. When you perform work, you make a part for somebody, you send them an invoice. That invoice amount is now an accounts receivable until they pay you. Conversely, an accounts payable is the opposite. When you've bought something and you haven't paid for it yet, you have an accounts payable. What is a purchase order, commonly called a PO? It is an official document from a buyer to a seller saying basically what they want to buy, how much they want to buy, and on what terms. What I mean by official is the seller will accept that purchase order or PO as a real order. So this can be anything from a small box of screws with an industrial supplier all the way up to Delta buying an airplane from Boeing. If you're a small business or you just got started, maybe some of the stuff was just e-commerce, you buy it with a credit card, so those terms didn't come up. But if you start issuing POs or doing business on what's called terms, a lot of times you'll see things like net 30 or unfortunately net 60, net 90, even net 120. What that means is in the case of net 30, you have 30 days to pay, usually from the date of the invoice. There's also net 10, 1%, 30. What that means is you can take a 1% discount if you pay within 10 days or otherwise pay in 30 days. And there's different variations of the percent discount and the number of days for that period. So why would somebody give you a 1% discount for paying quickly? Is it a reward? Not really. It's honestly speaking to the absolute power of cash flow and working capital. This is so powerful that it is this kind of secret behind how some companies and people have grown to the empires that they have. And I'll explain why. It was well known and well documented that when companies are growing fast, cash is king. It's so precious. When you can get paid quickly and pay other people over a longer period of time, you have a float or amount of working capital. There were examples like Dell Computer where they did this, as well as even to the extreme, a guy like Warren Buffett. Now, this example is a little bit outside of the spirit of a traditional invoice payable, but with somebody like Warren Buffett, he loves investing in insurance companies because they have this huge amount of money that they get paid as premium, and they don't have to pay it out until claims way later. It gives them a huge amount of working capital. Think about it on a machine shop level. If you want to buy a machine, and you've effectively been prepaid for a bunch of jobs or managed to get paid quickly and you don't have to pay for the cost of materials or other expenses way later, you end up with a huge amount of effectively free money. It's money you otherwise wouldn't have, and it's money that if you wanted to go out and say borrow it, you'd have to pay interest on it. The value of working capital truly cannot be overstated. The other reason it's so important is there are a lot of stats and stories thrown around about how small businesses struggle or fail. It's not because they aren't profitable, it's because they don't manage their cash flow well. And for a small business struggling to manage their accounts receivable, this can become an issue because you may be owed a significant sum of money by your customers, but you can't use that receivable, sometimes called a note, you can't use that receivable to pay things like your rent or your payroll. So just how important is cash flow to a small business? Here is a report from JP Morgan that evaluated over 600,000 small businesses. And there's some amazing statistics in here, including the fact that the median small business holds an average cash balance of $12,000 and has an average cash buffer of 27 days. Now, if you're watching this video, you've certainly heard about folks that get strung out, companies that don't pay on time or really abuse folks. And first off, I think that's the wrong way, period, to treat people. But the reality is business is business, and we've all got to kind of learn how the game is played. And I knew we struck a nerve when this topic came up on a recent Business of Machining podcast episode with John Grimsmo, and the number of submissions that we had from folks offering questions, concerns, tips, and their experiences. I thought we've got to do our best to kind of share some knowledge so that everyone is a little bit more comfortable with what's normal, when are you getting taken advantage of, and what are some things that you can do to improve getting paid on time. First off is, again, the suggestion that you can offer a discount for getting paid early. If you want to do that, absolutely, by all means, that's something that you may get traction with. We see our raw material suppliers often offer us 0.5% net 10, so we get 0.5% off. McMaster Carr gives us 2% net 10. Usually those are the range of amounts that you will see though. My opinion on that is it's not going to help, especially in the spirit of this video, which is not necessarily getting paid quickly, but rather how do you deal with the folks that don't want to pay? First off, and I don't necessarily agree with this, but it's the way the world works, many companies on net 30 terms will not start to process an invoice until the 30th day. Again, I think that's a bit unethical, but the reality is that's something to just expect. So you as a small business, you need to both plan for that and you've got to stick up for yourself. One of the best things that we've heard about is constant communication, meaning the day it hasn't been paid, you want to reach out to your contact or the accounts payable clerk, and or you want to send a updated statement. Sometimes that's called an aging report. Aging report is basically a list of outstanding invoices showing the amounts and how late they are due. If there's one thing to take away from overall, I would say don't take this personally. It's unfortunate, but most companies aren't actually doing this to particularly spite a specific customer or vendor. They're doing it because unfortunately it's become such common practice. So you've got to stick up for yourself, but you also got to realize don't expect to get paid early for no reason. We've heard a lot of suggestions around building in a price increase to accommodate for the fact that you know somebody's going to pay late. Obviously, you have to balance that with the fact that you have to be competitive, and it's kind of a question of how do you really price that in. What you should not do is don't try to add on or tack on a penalty, either at the original time of invoice or especially not after the invoice has been issued. What will most likely happen is if you try to add on an invoice or a cost or a penalty is it's going to further delay your payment, ironically, because the accounts payable clerk or whoever's handling the accounts payable and receivable is going to flag that as a amount that doesn't match the original PO. It's probably going to get kicked into a different department or a different level of somebody else who has to review it. They're probably going to reject it. It's actually quite unlikely that you're going to prevail and actually get a fee there. And so again, you're just going to get paid later and you're not going to get that fee. However, one great strategy is you can avoid shipping future orders until all past due invoices are made whole. You can say to a company, hey, we've got your next order ready to go, but unfortunately you're past due, so we're sitting on this shipment. There's also an overarching theme of try not to have too much customer focus risk. I've heard of these companies who say, man, we get beaten up. They pushed us from net 90 to net 120. They never even pay on time, and we can't do anything because they're our only customer. Those are not great situations to get into, not only for the risk of payment terms, but also too much concentration risk around a single customer. There is a difference, however, with companies that have really good brands or are considered the best of the best, and unfortunately it works against you. So if you do business with the government or a really credit tenant, a household name aerospace company, they may unfortunately push you out really long payment terms. That's not ideal, but you're almost certainly going to get paid. They're not going to stiff you for the invoice. So what you've got to do is you've got to plan for that. You've got to expect to get paid on that net 90 or whatever the terms that you agreed to with them were. In certain circumstances, you can negotiate a partial payment up front, especially if it's a custom style work, or especially if there's a significant amount of raw material, or you can have them do things like provide the raw material. This can help minimize your working capital exposure because in that case, you don't want to buy hundreds or thousands of dollars worth of raw material today to start a job, not to get paid for it for say 3 or 4 months. You can also sometimes even use a credit card. It's not as common in the industrial world with purchase order and terms, but we have seen more companies being willing to process transactions with a credit card, especially those that are, I would say, generally considered smaller, say up to $1,000 or maybe up to say $5,000. The downside is you are going to incur the credit card processing fee, which interesting strategy we'll come to at the end of this video on a new way to possibly handle that. Finally, if you have problems with certain vendors, separate those out and treat them differently. It can be difficult in business to not get frustrated. And sometimes when you have chronic folks often always missing their payables deadlines, it can be easy to want to get frustrated. But the key, again, is building a business and a framework that works. So automate the way you can send out those aging reports, build relationships with people, be able to call somebody on the accounting side or perhaps on the sales or the relationship side and say, hey, it really matters to us. We'd really like to get paid on time, or how could we figure out a way to get moved from net 90 to net 60 or from net 60 to net 30? You may not get anywhere, but you may be surprised at how that conversation can go. And if you have repeat offenders, those are the folks that you can treat differently. On an interesting note, we found that most of the industrial companies over time tend to stick up for the terms that they agree to, with the exception that oftentimes it seems that the net 30 invoices are processed kind of right around the end of that 30-day period. So your check may not come for another 10 days or so. Some of the worst offenders that we've seen without any regard for this seem to be in the world of education. It seems like too often the case that because they're in the world of academia or education, they don't feel the need to comply with terms and so forth. And we've just come to accept that. Again, we've actually never been stiffed by a school, but we've also almost never been paid on time. So you just kind of learn to accept it. So often the question you ask yourself as a business owner isn't necessarily, is this right or wrong? It's, am I at least getting treated the same as everybody else? Right after we post the original podcast episode where this topic came up, we were made aware of a new feature from a company called Xometry. You may have heard of Xometry, traditionally known for things like their online 3D printing and online CNC job shop kind of procurement world. They have a new thing, really interesting, called Xometry Pay. And what Xometry Pay can do is step in and handle as much of or even all of your accounting, invoicing, and payables issues. Meaning you can do a job, run the invoice through Xometry Pay. They will handle the payment terms and conditions with the customer, whether it's via check, whether it's via credit card, and you can choose how you want paid by Xometry Pay. You can get an advance immediately of up to 30%. You can choose to get paid on a traditional net 30 terms. And what I love about it is there's a fee for it, but that fee seems to be pretty good, especially if the customer ends up paying with a credit card where you would have to eat that fee anyways. So in this case, it gives you a force multiplier effect where you don't have to handle that at all, and it'll give you much greater stability over how you can predict and manage your working capital without having to bring extra people or processes in-house. We're a great example. We're a relatively small company. I don't want to think about having to staff up our company long-term with having in-house bookkeeping, accounts payable, working with a collection agency. And what Xometry Pay seems like it can do is really separate the two things, meaning I can get paid as quickly as I want, and Xometry will take care of setting up whatever payment terms it wants to work out with the customer, or my customer really, so that my customer can choose to pay as quickly as they want. Most importantly, they're long-term taking off that burden and overhead, which is great because that lets us focus on what we're good at, which is manufacturing stuff, and we don't have to worry about tracking our accounts receivable. And equally important, we don't have to get into the business of setting up terms with customers ourselves or spending our time trying to go through the credit reference process with a prospective customer. Otherwise, folks, hope you learned something. Hope you enjoyed. If you have questions, please post them in the comments below. We'd love to chime in and answer them. And if there's more topics around this that you want to see, again, let us know in the comments below. Otherwise, folks, take care. See you soon.